morning, everyone. It's Friday, May the 29th, and welcome to 7 Investing Live. This is our live stream event we host every Monday, Wednesday, and Friday at 10 a.m. Eastern Time to put a spotlight on several of the market's most intriguing opportunities. My name is Simon Erickson. I'm founder and CEO of 7 Investing, joined by Heather Horton, our executive producer of the 7 Investing Live show. We have a treat for you here today. One of the greatest companies in 7 Investing's investing history, Rocket Lab. We're going to be looking at a deep dive of the company's current valuation. This is one we have an extended history with. We followed it since its SPAC IPO in the summer of 2021. Here we are 5 years later. The stock price is significantly higher than it was then when it came public at $10 a share, now $15 a share. Where do we go and what do we do with Rocket Lab from here? We're going to be digging into this. We're going to be digging into the 11th iteration of my discounted cash flow valuation model. I'll explain what that is in just a moment here. But this is going to be an objective look at the valuation. Nothing to do with necessarily what the market is doing with the stock price out there, but just intrinsically, what is this company truly worth? Now, before we get into that, Heather, I did mention that we've got a long history with Rocket Lab out there. I'm going to show a couple of numbers on just how we are not just bandwagon fans of this stock out there. This is something that 7 Investing has followed for quite some time. You can see right there, August 2021, right after the company hit the public markets, we made it an official recommendation right out of the gate, $10 a share, right there, the SPAC IPO. The stock is up 15x from there, but wait, it gets better. Went on to re-recommend it Rocket Lab again in February 2022. Went on to recommend it a third time in March of 2023. And there are even 7 Investing team recommendations on the scorecard as well. You can see the average recommendation of mine for Rocket Lab is now a 20 bagger, more than 1,900% return, an average of 2,033% return. Of course, significantly outperforming the 76% return of the S&P 500 over that same time frame. If you do want to see all of our recommendations on the 7 Investing scorecard, not just a recommendation of Rocket Lab, but all of them that we've made since we launched in March of 2020, now more than 6 years in, all of the recommendations that we've had, you can see those at 7investing.com/recommendations. And you can do that by getting started with 7 Investing today at 7investing.com/subscribe. We'll put a link up there right now. Hopefully we can show it in the screen for the live stream itself. But again, your first week is absolutely free. 7 days of basically no strings attached, full access to all the premium content we have at 7 Investing. Includes all the Rocket Lab recommendations, includes all the recommendations we've had. It has the monthly best buys on all of our premium content. I'd encourage anyone watching this show that wants to see all of our official recommendations, please go check that out. Keep in mind, 0 upfront cost for your first 7 days. For Rocket Lab specifically, we're going to get into the nitty gritty. We're going to get into the valuation details and the DCF model in a moment. I want to share a few resources here of where we're pulling this information from. First and foremost, here are a couple resources that are quite useful. 7 Investing pulls a lot of things from a lot of places. I would recommend going to Rocket Lab's first quarter results. They put those out on their investor relations page. You can check that out at investors.rocketlabcorp.com. You got a nice little recap of their first quarter investor results. This is very useful to see some of the progress the company is making. I would also highly recommend going through their annual report. That's at sec.gov. This is where you can get a lot of insider information, not that kind of insider information, but insider to the company information, headcount, margin profile, scaling up the strategic programs they have, things like this. You can find that in the annual report. That's the 10K. And then also the quarterly report, which is your 10Q right there. Both of these can be found right there at sec.gov. You can follow along with Rocket Lab. You can just type in at RKLB. And then last but not least, we use a bunch of different resources too. One that's been very useful for me has been Y charts. This is one that kind of gives a nice little recap of the company and how it's progressed in the public markets as well. So I would highly recommend all of those resources. Heather, are we ready to get started? Should we dig right into the valuation? Rocket Lab has been a fantastic company to own for the last couple of years. We're going to find out today what it's really worth.
Yeah, I've been looking forward to this one, as has several people online. We had a very nice comment from Luke Howard saying he was looking forward to this.
Luke, a good friend of mine. It's nice to hear from you. Glad you made it here on the other side of the pond here. I know it's a Friday evening. Glad to be chatting Rocket Lab with you. Hopefully you've got a wine or a bourbon in hand as we're going to get into the nitty gritty here. Let's get started. Let's jump into Rocket Lab here. Let's go ahead and share the DCF itself. And a reminder as we jump into this, first and foremost, this is going to be in the trenches, not afraid to kind of get into the nitty gritty on this one. But also a reminder that a DCF valuation model is not necessarily indicative of what the stock is going to trade for on any given day, month, week, or year. The market is a giant auction. This is simply an intrinsic value of what the company is worth, is what is fundamentally worth. I'm a fundamental growth style investor, which means I look at the company's fundamentals to assess what a good valuation is, to say, put a stake in the ground, say, hey, if I'm discounting all of the future cash flows of this business back to the present today, what is the stock truly intrinsically worth? That's what a DCF model does. And again, we're on the 11th version of this. This is something that we tend to update every year or so. In the first couple of years, it was more than once a year, but now we're on the 11th version of this. So as we get into this, no matter what the final number is, keep in mind that's not necessarily what the stock price is going to show. Plan your investing accordingly, but this is kind of meant to be kind of a framework that shows, okay, what's the stock worth versus what it's trading for today? And we're going to zoom in here. Let's go ahead and get a little bit closer so that we can see, hopefully.
And real quick, Simon, if anyone wants more of a company overview, that would be in part 1, which will be linked below, of just what Rocket Lab is and what they do. So if you missed that, worth checking out if you're interested in the company.
Great point, Heather. Thanks for that. And also, if we wanted a more detailed look at Rocket Lab coverage on 7 Investing, do we have a company page for Rocket Lab also on our own website?
Of course we do. That would be at 7investing.com/Rocket Lab. Here it is.
Thanks very much for that. You can always go to that. It's a free site. You can always check out all of our coverage. We post a lot of it right there on the website. Heather, are you able to see any of the numbers, or do I need to zoom in a little bit closer as we go through the DCF here?
I can see them pretty well, but I think you're at a good place. If you cannot see them, please comment in YouTube, wherever you're watching.
Perfect. Okay, great. So Rocket Lab, again, this is a company that really wants to be an end-to-end space company. It got its start by doing dedicated launches for commercial or academic customers. It has now moved up market. It's winning larger contracts, and it's not just launching other satellites into space. It's also doing a lot of the manufacturing of those satellites and their components as well. And so Rocket Lab is organized into 2 divisions primarily today. One is launch, the other is space systems. Launch is the revenue that derives from launching the rockets. Space systems is what it derives from manufacturing the satellites and the components themselves. We're going to talk about a 3rd division here in a moment, but the first part of a DCF is going to be the top line. How is this company obtaining revenue? And let's take an objective and methodical approach to figuring what the revenue is going to look like. Not just for 2026 this year or 2030, a couple of years out, but I'm going all the way to the year 2041, using some reasonable assumptions on how to determine what the revenue of this company is going to look like. Once we have the revenue picture in place, we're going to walk down the income statement. We're going to look at kind of the scalability of this business, the costs of goods sold for manufacturing and launching the rockets themselves. We're going to be looking at the operating expenses. What do they employ? Who are they employing at their facilities? Whether that might be marketing and sales folk, whether that might be R&D folk that are working on the next best thing out there. We're going to be looking at the operating expenses, the operating profile. We're going to see how that ramps up over time. And then once we get down to a net earnings per share, which is typically what we focus on, or a lot of Wall Street is focusing on every single quarter, we're then going to go from an earnings per share GAAP reported metric to the free cash flow that is generated for us as investors. And free cash flow accounts for things like capital expenditures, acquisitions, stock-based compensation, or other things that are non-cash in nature that have affected the earnings per share. We want to actually articulate those and get to a final free cash flow that the company is generating every year. Once we have those free cash flows, that's the excess capital that the company has available for our good as investors in this business. We're going to then discount back those free cash flows to the present day to determine a present value of Rocket Lab stocks today. A lot going on there, but let's start from the top. Let's look at the revenues of what Rocket Lab is obtaining today. The first division is their launch division. Rocket Lab right now is launching 1 rocket. It's the Electron rocket. It can carry up to 200 kilograms, 300 kilograms of payload. Place it anywhere you want to into orbital launch. And if you look at this, we've got historical data. These are actual numbers from fiscal 22 to fiscal 2025. And then also this middle column in column O is the update that we just got in the first quarter of 2026. So these numbers right here are quarterly numbers. Everything else that you see is an annual number that is either historical in the past or a projection going into the future. But here's where we stand right now. Launch revenue for the first quarter was about $63 million. It all came from Electron. And Electron had 8 launches that it did in the first quarter of 2026. It appears, if you were to do that on an annual run rate, that Rocket Lab is going to have significantly more launches in 2026 than the 21 launches that it had of Electron in 2025. In fact, I am projecting that Electron is going to have 30 launches in fiscal 2026 and ramp up to 50 launches by the year 2030. In fact, we didn't just come up with that number out of nowhere. It was specifically and explicitly stated by management, CFO Adam Spice, that Electron's business with the 3 state spaceports that they have right now can ramp up to 50 launches per year. We're going to go with that right now, keeping in mind they might actually have the capabilities to have more than 50 in the future, but we're going to take management with what they say. I think that by the year 2030, you're going to ramp up to 50 launches for Electron per year. If you look at the total revenue that Electron has been doing, divided by the number of launches that Electron has had, we can calculate out an average revenue per launch for Electron. In fact, when Rocket Lab was just kind of getting started back in 2022, this was about $6.7 million per Electron launch. In fact, they were losing money on every single one of these because it was costing $7.5 million per Electron per launch in cost of goods sold to build the rockets, to get it to the spaceport, to actually put it into the orbital plane. The company knew that it was going to scale this up over time. And look at over the next 3 years how the cost per launch of Electron has declined from $7.5 million down to $5.65 million last year, and even further to $5.4 million in the most recent quarter, while the revenue per launch for Electron has increased from $6.7 million in 2022 to $9.3 million in the most recent quarter. How is this possible? Well, not only is Rocket Lab increasing the pricing as it goes forward, but it's also carrying larger payloads. One of the drivers of the Electron revenue per launch going higher has been the HASTE program. This is Rocket Lab's hypersonic program that it's working with the Department of Defense for, carrying larger payloads, and it's immediately going to be launched as soon as possible. The government has a responsive space program where it calls Rocket Lab and says, hey, I want to have this rocket ready to go and the satellite placed as soon as possible so that just in case there's a security threat or something is happening, they don't want to wait for a month or longer to get their necessary components out into outer space. They want it right away. So hypersonic HASTE program has increased the revenue per launch significantly, and I think that's going to continue in future years as well. In fact, if you look at my projections for fiscal 26 and beyond, I'm expecting the revenue per launch to increase at an average of 3% per year for the first several years, and then slowly decrease, and then slowly increase all the way up to a launch revenue of $15 million per launch for Electron by the year 2041. Sounds like a big jump to go from 9 to 15, but keep in mind this is over a 15-year time horizon. I think it's very doable. On the other hand, I think that the costs per launch are going to continue to decrease. We're at $5.4 million per launch today. You can see how I similarly have that decreasing between 2.5% then to 2% per year, down to 1% per year, and then all the way down to $4 million per launch by the year 2041. You can see the margins improving as Rocket Lab scales this business up, gets more efficient, uses reusable components within the Electron rocket, and you can kind of see how we're going to scale up to 50 launches per year. But wait, things get better. We've always been watching the bigger rocket. The bigger, badder rocket is called Neutron. This is the one that's going to be carrying 1,000 kilograms of payload capacity instead of just a couple hundred kilograms. Neutron has been something that's been waiting in the wings for quite some time. But this is important to Rocket Lab because whereas a traditional Electron launch might carry enough to carry the payload for maybe 2, maybe 3 satellites that you want to place in orbit, a constellation of satellites is possible with Neutron. Now, all of a sudden, instead of placing just a small payload, you're placing a much, much larger payload. You can get a really much better bang for your buck as you're putting multiple satellites up at the same time. The other beautiful thing about this, which is the scalability of the business, is instead of charging $9 million per launch, it's expected that Neutron is going to carry a price tag of at least $55 million per launch, putting it in kind of the same category as the medium lift that SpaceX is doing today. When you get that, you're again going to see economies of scale. I think that Neutron's pricing is going to go even higher, from $57 million for one launch I would expect this year, all the way up in fiscal 2041 to $120 million per launch. Again, based on the payload, based on the number of constellations, based on a lot of factors of what you're working with your customers. And today, I estimate that the first Neutron launch, which has not happened yet, but we're expecting by the end of this year, is going to cost around in the neighborhood of $25 million. In fact, my prediction for 2026, as they work out some of the kinks of the final things that they're working on, the testing and development of this, I think it's going to be just a little bit lower than $24 million per launch. This is going to scale all the way to $17 million per launch for Neutron by 2041. So combining the two of those, increasing revenue per launch for Electron and for Neutron, along with the declining cost per launch, you can see the cost of goods sold as a percentage of revenue consistently going down. This is the cost of manufacturing and transporting and launching the rocket, going from 60% of revenue last year all the way down, in my opinion, to less than 20% of revenue, 18% by 2041. Sounds like a big jump. I think that's entirely doable. You're going to capture a gross margin for the launch division that was 40% last year, is 44% in the first quarter. I expect to be 48% by 2026. And then by the end of this forecast window, we'll reach all the way to 82% gross margin for the launch category by 2041. I'll take a break at that moment. Heather, do you have any questions about launch as I take a sip of coffee just to catch my breath? But this is kind of the traditional Rocket Lab business line of launching other satellites into space. I think that it scales up quite a bit over the next 15 years. And you might be on mute, Heather, unless I have an audio setting incorrect on my side.
Nope, I was on mute.
Gotcha. Perfect. Okay.
Didn't want people to hear me drinking my coffee. So is there a minimum, the cost per launch is going down and they're reusing parts, which is very good for cost of launch. But I assume there at some point there is a cap. Like it costs, you can't optimize anymore. Do you have an idea of where that stop is?
Yes, and that's depending on the components that you're reusing, right? You can't reuse fuel. That's something you're always going to have to put into the rocket for every launch you have. But the casings, some of these things that they've actually been able to recover either out in the ocean or they're working on actually doing it with helicopters as it's falling back in a parachute to Earth. I mean, a lot of that is included in cost of goods sold today. You can recover a lot of those components. And then also another thing that's really scalable too, which isn't so obvious at first glance, is a lot of the cost of goods sold cost is personnel. Rocket Lab calls this production personnel. These are the people that are manufacturing the rockets, or right there that are doing the launch sequence. That's included in the cost of goods sold line item. As you get more efficient, you start doing more launches. That gets more efficient. Margins go up over time.
Okay, that makes a lot of sense. And yet the scale with the larger rocket gives a lot of interest to that spreadsheet for sure.
Absolutely. So let's march forward. Let's keep going. We went through the launch piece. Let's now look at space systems. This is a neat division too, because Rocket Lab keeps acquiring more capabilities to do more and more cool things. Space systems is not only manufacturing the satellites themselves, but a lot of the components that go with the satellites. The flywheel so they can move around, the propulsion so that you can put it right in the orbital plane you want it to, the solar panel arrays so that you can actually power these systems, the robotics so that actually can do a lot of things when it's up in space. These are the things that are, some customers are able to do those, but a lot of customers are not. And so part of the contract, increasingly, when you deal with Rocket Lab and say, hey, I want you to launch this into space for me, they also want you to build a lot of those components, if not the satellites themselves. That's what space systems is. And you can kind of see this is a division that's been growing quite nicely, right? From $150 million back in fiscal 2022 to $400 million, more than double in fiscal 2025. And look at this, we're already $137 million here for the first quarter alone. This is something that's going to be largely tied to contract wins that Rocket Lab has. So we need to look at backlog to get a good estimate of what space systems revenue is going to be worth. You can't just say, okay, it was $400 million last year, so let's just throw darts and say it's going to be worth $600 million this year. You have to look at what Rocket Lab's backlog of contracts are, and then how quickly can they recognize that backlog, that deferred revenue in the future, into current annual revenues. How quickly can you work through that? What manpower do you have? How long is a project and the contract going to look? And so I want to look at that. Let's jump ahead a little bit. The space systems revenue I have as kind of a factor of the different programs that Rocket Lab has won. In fact, if you looked at some of these, some of these early commercial wins that they had, Varda Pharmaceuticals, Global Star, even some stuff like government agencies like NASA, it's kind of transitioned from smaller beta test customers, maybe some small commercial customers, maybe some academic research being done, to much larger Defense Department spending. Look at things like the Space Force projects. Look at the things like the Space Development Agency that's been working with Rocket Lab to do these larger projects, right? This is something that used to be Rocket Lab would recognize maybe 20, maybe 30 or $40 million a year in revenue, to now something they're going to start recognizing $258 million a year in revenue from a single contract, right? And it seems like they're getting even larger too, right? Whether that's a NASA program, whether that's a Defense Department program, whether that's a Space Force program, these are big contracts up for grabs. And why does Rocket Lab want to expand its capabilities? Well, because if you can build a satellite and then you can also build the propulsion and then build the flywheels and then build the solar arrays and everything else, you can bid for a larger and larger share of a contract that's up for grabs. You can do more things, you can win more revenues, and you can recognize better economies of scale from it. And so a lot of this discounted cash flow valuation that I've done has been, okay, what are the new programs that Rocket Lab has actually announced that you can see on their investor page? How does that figure into what the average backlog is going to look at, keeping in mind most programs are 2 to 3 years? And then what is up for grabs that has not currently been announced, but we think they're going to recognize in future years? And then even on top of that is, what is a reasonable estimate if we go farther than 2 or 3 years out, which is typically how long a program will last? If you're looking at the year from like 2030 and beyond, what's a reasonable estimate of the space system's current annual revenue that they're going to report in terms of revenue that we don't even know what the programs or the contracts are going to look like today? So this is something that iteratively gets better every time. Again, we're on the 11th version of this discounted cash flow. This was something on the first one. It was kind of shooting darts, saying what's a contract going to be worth for Rocket Lab in the year 2033 or 2041? This is something that's very, very difficult to model. But as we get more and more information about what the contracts are worth that they're winning, and then what is the size of prize of several of these programs, right? Space Force NSSL program worth $5.6 billion total contract. The Golden Dome mentioned to be worth up to $175 billion in total spend. What is Rocket Lab generating from those contracts? What are the contracts going to look like? And then how are you ultimately going to recognize that as backlog? Right now, first quarter 2026, Rocket Lab's total backlog is $2.2 billion. $921 million of that is in launch, and $1.3 billion of that is in space systems. And look at how this has improved, rather, from $1 billion in 2024 to $1.8 billion in fiscal 2025. Now, just one single quarter later, already up $400 million, greater than that, $2.2 billion in the first quarter. I think there are some really big contracts out there that Rocket Lab is going to be winning some really big deals from. So I think by the end of this year, Rocket Lab's backlog is going to increase from $2 billion in the first quarter to $4.3 billion by the end of the year. How? How are we going to recognize that? I think that we're going to get some more clarity on the space, the SDA, some of the programs that the SDA has already got in place, the Space Development Agency. We're going to start seeing some of these come to light. And I also think that a lot of these other unknown programs that might be tied up in some of these recent wins that we've had that are worth a lot more than what Rocket Lab has already gotten so far, I'm starting to add in kind of a fudge factor, if you will, that's going to play a part of a $4 billion backlog for total backlog. And then again, how is this going to look? If we recognize all of these programs in terms of what percentage of backlog can you realistically have in a single year. Keeping in mind a lot of that is going to be launch backlog that you're getting from what we looked at before, the Electron and the Neutron launches. Sorry for my ADD spasticness all over the spreadsheet there. But basically, if you take the total backlog, then you figure out how much revenue you're going to get from it per year. You take back out what you're actually doing in terms of revenue for launch. This is what is remaining that I think is going to be a net space systems revenue per year. And look how that would, in my estimation, go from $400 million in fiscal 2025 to $600 million in fiscal 2026, all the way a step change jump to $1.6 billion in fiscal 2027, and scaling all the way up to $11 billion of space systems revenue by the year 2041. Again, that sounds like a lot. That's a huge jump from $400 million to $11 billion, but over a 15-year window, knowing how large this market is and how aggressively Rocket Lab is going after it, I think that is more than possible. And then the other part of this is going to be as well, once we have that revenue in place for space systems, here it is. What is the margin profile going to look like? Costs of goods sold last year were about 67% of space systems revenues. I think that's going to improve. We've already seen that improve in the first quarter. Cost of goods sold declined to 65% of revenue, meaning the gross margin of the space systems group went up to 35%. I think we're similarly going to see that increase to 40% by the year 2030, all the way up to a steady state of about 51% by 2041. That's your gross margin profile you're going to get from space systems. And we're running a bit low on time, so I won't talk too much about space applications. But this is going to be another group where Rocket Lab would build its own flatellite constellation. It would handle all of the operations of it. It would handle all of the capital expenses of it. It would cost all of the upfront cost for it. But then, just like cloud computing does today, it would rent out the capacity on a per month or per year basis to customers that just want to have the monitoring and the operations and anything that would be associated with it. Again, this is like Amazon Web Services renting out computing capacity for you for cloud-based applications. If you have a space-based application, this is what Rocket Lab would do for you. And so pulling all of this together, if you look at the launch division, if you look at the space systems division, and then include in that kind of new division that I think is going to get going in a couple of years of space applications, I think that the gross profit profile of Rocket Lab, going from the revenue we're looking at today and all of the costs of goods sold of all of those divisions, and the growth that you'll have of the production headcount that goes into the manufacturing of the rockets, the launching of the rockets, the mission control of the rockets, all of the things associated with launcher space systems, I think you go from a gross margin profile today of 31%, 35% last year. There's clearly an error right there on this one, excuse me. There's a very, very large cost of goods sold compared to that. We'll address that one, but 41% next year gross margin, all the way up to a gross margin profile of 60% by the year 2041. I'll take another sip of coffee, but this is kind of, we're working down the income statement here, Heather. We've now looked at all of the revenues from all the divisions. We've looked at the costs of launch and the cost of manufacturing components. We're at about a 41% gross margin profile for Rocket Lab at the consolidated business level. I think that increases up to about 60% by the end of the 15-year forecast window.
The sheer dollar amount that is available in future contracts, just the Golden Dome project. And there's only two real competitors, right? SpaceX and Blue, it's not Bluehost.
Origin, yep.
Blue Origin. But they kind of do different things anyways, don't they?
That's correct. SpaceX is much more interested in large lift rockets or even massive lift, the Starship. And most of what it's wanting to do is a lot of its own internal things, right? It wants to build things for the space station. It wants to do some programs for the Department of Defense. But so much of what Elon's wanting to do is, launch his own constellations for telecom, build orbital data centers for what SpaceX wants to do. A lot of the things that Rocket Lab is doing, especially in medium lift, is not directly apples to apples comparable with its competitors.
Okay, nice. So do they have any competitors for those kind of medium lifts?
I mean, Blue Origin is one that would be considered, in my opinion, a competitor. You saw they just blew up one of their rockets here this last week. Bad sign for Blue Origin, good sign for Rocket Lab. Someone's got to do that if they're not able to. There are others as well, but I think that Rocket Lab is kind of in a nice little swim lane of its own right now.
I mean, even if numbers like 175 billion are getting split three ways, you're still looking at huge amounts of money. Um, this is less important to the overall company. What is a pharmaceutical company doing with them?
These
Varda?
guys were wanting to look at zero gravity drug development. If you could actually develop drugs where you didn't have gravity pulling you down, what would that look like? Kind of interesting, right?
Very interesting. It just seems like such an outlier. Um, you said you were kind of fudging the numbers further out, which of course you always are going to have to, but they don't seem that fudged based on current backlogs and upcoming projects.
Yeah, absolutely. And this is something that we'll again fine tune. This is something that you can't say definitively this is exactly the number in the year fiscal 31 that you're going to have from all these programs. But I think it's directionally there, Heather. There's a lot of objective thought that went into kind of where we are on this so far.
Yeah, and watching the past numbers increase is really impressive. If people are watching after the fact, after this stream, and they want to chat about Rocket Lab, share their thoughts, we do have a Discord that they can join. The link is below. It'll be in the comments, but it's the community forum, and that would be a great place to chat about this really interesting stock.
Absolutely. And, we've got just a couple minutes here to talk about it here today. The community forum, like you mentioned, thank you for pointing this out again, Heather. This is where we really get into it. We go back and forth. You can even challenge, any of the assumptions or the inputs in this DCF, really get a handle on what's going on. If you're a serious Rocket Lab investor, highly recommend this. It's really worth its weight in gold to see what's going on. Yep.
Oh, go ahead.
No, go ahead. I was just going to jump into the operating side.
I was going to ask if there was anything on this page that you were particularly worried about, and would be like the one thing to really be watching if there is one thing.
Yeah, I mean, this is the biggest uncertainty is kind of, what are the future contract wins going to look like? There's a chance that Golden Dome is not worth $250 million to Rocket Lab in fiscal 2027. Maybe it's worth $1 billion or $2 billion. I mean, this is a program that's been mentioned $175 billion is up for grabs. Could Rocket Lab get 2% of that or even 10% of that? I mean, this could be completely directionally off. And it blows all of this up in a good way, in the best way possible, that all of a sudden Rocket Lab has more business than it can keep up with. And then it has to go out and, add capacity and, add facilities to keep up with these things. I tend to be conservative in the DCFs. I'm objective with them, but I would rather be erring on the side of caution rather than overshooting.
Makes sense. Yeah.
We're going to go through this a little bit more quickly. I think that we understand the top line and the gross margin profiles. Operating expenses are largely a factor of headcount. In fact, if you're in the CFO office and you're kind of doing budgeting, how many people do you need to keep up with the demand that you have out there for your customers? And so you can see Rocket Lab has got a total headcount last year of 2,100 people. And then all of a sudden it's at 2,600 people in 2025. And it's already a little bit lower here in 2026. But what's interesting is a lot of the people that used to work in R&D or even in corporate overhead, they move those programs to the production side of this business. Look at how the production headcount is growing as R&D headcount is declining. You're not firing those people. You're not laying them off. You're just moving them from a program that was conceptually, being worked on before as an R&D project. Now it's a production program because you're generating revenue off of it. So that's why you see the cost of goods sold headcount going up. You see the R&D and SG&A costs, at least in terms of this income statement of the line item of the spreadsheet, declining in terms of the headcount that goes to R&D and SG&A. I still think that R&D is going to be a significant component of spend. You can kind of see how this is going to track over time. I think that SG&A is going to be a much lower component of spend. You can kind of see the operating profit of this company over time. Going from what I think is going to be a negative operating profit of negative $134 million this year, that's still a negative operating margin that I think is going to actually grow pretty quickly once we start getting Neutron launches out there and once we start scaling that up. I think this is really quickly going to be the step change that's going to push this division and this entire business into kind of the teens operating margins. You might look at that and say, Simon, how are you going to get 2,700 basis points of improvement in operating margin a single year? Well, simple. You're going to start launching Neutron. where you put all this R&D work up front and all this overhead up front, and then all of a sudden you start launching these things at $50 million a launch out there, and you start moving that production, that's going to really ramp up your margins very, very quickly. It's a step change we've been waiting for in this business. There's a little bit of interest expense. It's very, very minimal now because Rocket Lab retired most of its convertible debt. We won't discuss that here on this show, but if you want to get in the community forum, I've got a lot of details on what that is. They also had an at-the-money cash offering. This is where Rocket Lab can raise up to $3 billion in the open market by selling stock. I think that you are going to take advantage of that this year. I'm expecting about 20 million shares issued at $150 a share. Boom, $3 billion on your balance sheet and go shopping out there for future acquisitions. If we walk all the way down here to the GAAP earnings per share, again, less important for a DCF analysis. This is something that looks at, Wall Street is looking at much more closely on this. Rocket Lab tends to do a pretty good job of outperforming what it tells the street it's going to do. Depreciation, again, this is something else that once you've done enough of these models, you kind of know how to model it out. Depreciation as a percentage of capital expenditures necessarily should increase as you're less spending on upfront CapEx for new programs and new facilities to more of things that are maintenance in nature. That's why you kind of see the depreciation increasing over time. You're maintaining existing facilities rather than building new for growth. You've also got stock-based compensation, tends to be about 13% of revenue. That's what we saw in fiscal 2024 and fiscal 2025. I modeled that to be just a set percentage of revenue as well. Again, that's an assumption that could be challenged. It could be something that we could iterate over time. It seems like a reasonable assumption right now. This is a non-cash charge that does dilute shareholders every year. You then see the operating cash flow of the business, an assumption about what the capital expenditures are going to look like. Again, a lot of this was kind of facilities. We needed to do the development facility for Neutron that they had out there in Alabama. You wanted to build the launch pads themselves out. Now you've got 3 launch pads for this, 3 spaceports out there. I think that Rocket Lab's CapEx as a percentage of revenue is going to decline from 22% a couple years ago. We were at 14% last quarter. I'm kind of thinking a steady state is about 10% of revenue. I think that's a pretty reasonable assumption right now. We can look at it. Might adjust by a percentage point or two over time, but I think this seems like a pretty reasonable input right here. And then acquisitions, we've seen quite a few acquisitions that Rocket Lab has been making in recent years, whether that be for robotics, whether that be for propulsion, solar arrays, things that they've been doing to add the capabilities that they have to win larger and larger contracts. I'm just going to put in right now a future acquisitions line item that I think every 3 years, starting in 2027, you're going to have around $500 million of cash cost for future acquisitions. And again, this could be spread out a little bit more evenly, right? Maybe it's 200 and 200 and 100 or whatever it is. But I think it seems kind of reasonable that Rocket Lab is going to be spending a lot of that money that it's raising in the market right now is going to go to future acquisitions so they can win larger contracts. I'm saying $500 million every 3 years as a cash cost. And so here is the final answer at the end, almost the final answer at the end, the free cash flow that we are generating for the business, right? We went through everything there. We went through all the revenues. We went through all the costs associated with getting those revenues. We went through all the operating costs of the business. We went through the articulation of GAAP earnings, then to cash flows themselves. We looked at all the stock-based compensation. We looked at all the capital expenditures of the business. We looked at all the acquisitions. What is left after all of that? The free cash flow that is owned by us as owners of this business. And so here's what I think the free cash flow profile is going to look like. I still think it's negative in 2026 and 2027, keeping in mind we are counting that acquisition line item right there. But then I think it scales up pretty significantly. I think you're doing at least $1 billion of free cash flow by the end of the decade, all the way up to about $8 billion annually by the year 2041. Very profitable business. You've got some step change improvements that are going to be coming in the next several years. Now what we're going to do is we're going to discount those back to the present. This is a hard one to figure out what is the appropriate discount rate to use. I'm already over time, Heather, so maybe I won't spend another 30 minutes going through just how do you come up with a discount rate. But it's a factor of the size of the business that Rocket Lab is, the percentage of the capital that it's raised from equity versus long-term debt. It's determined by its debt rating. What is the debt credit rating for Rocket Lab if it wants to raise long-term debt? It determines based on the beta of its stock. Has been a very volatile stock that has significantly outperformed the S&P 500 over the last 5 years. All of these factors go into this, and this is very, very difficult to come up with the correct discount factor. Rocket Lab, you could make a case that Rocket Lab could have a 25% weighted average cost of capital. It's all equity right now. There's hardly any debt on the balance sheet, and it's extremely volatile stock. You could go out there and say, hey, even as large as Rocket Lab is, I still think it's super risky, and anything could happen with this, especially if something blows up or something happens. You could make a case that this is a company that's got a weighted average cost of capital of 25%. On the other hand, this is now a business that's not a startup. It's got an $80 billion plus market cap out there, and it's already got a lot of fixed assets in the ground, right? You've got space, rocket launching facilities. You got spaceports. You got facilities you could sell off. You've got capital, that the business owns. You've got cash on the balance sheet. You could easily raise debt at, in my opinion, less than 6%. If they wanted to, right? And Rocket Lab is now kind of at the same kind of level that you would be kind of, companies that are in the S&P 500 in terms of market cap and equity size. You could make a case that you could have a 5 or a 6% weighted average cost of capital for a business like that. Right now, for the purposes of this valuation model, I am going to set the weighted average cost of capital exactly equal to the average component of the S&P 500. I'm saying a weighted average cost of capital of 10.26%. You can argue this. You can again say that could be closer to 15%. You can say that's closer to 8%. I'm going to split the difference for this and just say, let's treat Rocket Lab as though it is a component of the S&P 500. The average median weighted cost of capital is 10.3%. We're going to use that as a discount factor as we're looking back on what this business is worth. So using a 10.3% average cost of capital, keeping in mind there's dilution every year, we're going to look at the total number of shares outstanding in the year 2041. We're going to discount all of those back to the present. Here's the present value of all of Rocket Lab's free cash flows over the 15-year horizon. Here is the present value of their terminal value in all years past that. This is the enterprise value of the firm. There is very little long-term debt that you deduct out of that. Here is the number of shares outstanding at the end of the forecast period, which we extend back to the present today. When you divide the enterprise value of the firm less the long-term debt that is outstanding out there by the total number of shares outstanding after discounting them back at 10.3%, we come up with, drumroll please, a final equity value of what Rocket Lab is intrinsically worth today of $45.12 per share. Two things. First of all, this is significantly higher than what I came up with last year. The last discounted cash flow, version 10.0, that I estimated Rocket Lab what it was worth, I said it was worth $27 a share. It's now, in less than a year, worth $45 per share. How do you go up that significantly? Margins improved. The average revenue per launch improved. We have some clarity on Neutron out there. We saw that they're being very conservative on how they're spending internally within the business. And we looked at the backlog, and I think there's a lot of backlog that's still up for grabs out there. The company is doing very well. It is executing incredibly well right now, and there's a reason that this intrinsic value went up. It's doing better than I expected it was going to in all of the assumptions that I used for the DCF last time I did this last year. There's something else you'll notice, though, which is part two of this, which is that $45 a share is significantly less than $150 a share of where Rocket Lab is trading right now. Simon, how can you be one of the biggest bulls in the investing world on Rocket Lab, who was pounding your fists on the table saying, buy this stock when it's $10 a share, to come out and tell me that Rocket Lab is selling for 3 times what it is worth today? Again, back to full circle, the disclaimer right at the beginning of this program, the market is going to do what the market's going to do. Even if the fundamentals of this business and the discounted free cash flow of this business, using the assumptions that I've used, say that it's worth $45 a share, perhaps the market has much, much higher expectations for this than I do. Perhaps Wall Street thinks that Neutron is going to ramp up much more quickly than it is. Perhaps Wall Street today thinks that The margin profile is going to scale up much more quickly than it's going to. Perhaps there's hidden potential in other acquisitions are going to get out there. There's a variety of reasons that the market is very, very optimistic on this stock right now. But again, I put a little bit of a disclaimer out there that as somebody who has been one of the most bullish analysts on the stock for a very, very long time now, it still, in my estimation, seems significantly overvalued right now. Does that mean you should go out there and sell all of your Rocket Lab shares? I would recommend not doing that. I think that this is a company that's got a lot of momentum, a lot of a tailwind at its back, a lot of things going right. It's shown that it's executing well. You've got the greatest leader in this entire industry that's the CEO of this business right now, Sir Peter Beck. There's a lot of things Rocket Lab is doing right. However, I would still caution, if you're looking at shares right now at $150 per share, I'm a little hesitant to be picking up more shares right now, knowing that there's a very nice premium going in. So Heather, I'm going to wrap that all up. We'll do a couple final questions here at the end, but I think that the reason I do this is to not only just look at Rocket Lab and say, hey, great stock. Wow, it's up, zillion percentage points, an average of 20x on our 7 investing scorecard, rather than just doing the hoorah and the marketing, to talk about how great of a pick it was. I think it's really good to check back in every year and say, what is an objective valuation for a company like this, just so investors know what you're getting into. And that's why we're going to continue to do these DCFs and continue to take a look at the valuation each and every year. But this is going to be the refresh that we did here in 2026.
So what is your buy number? Is it 45, or would you be interested in adding between 45 and 150, 130?
Yeah, I think that if I'm buying shares, I'm going to wait for it to be closer to $40 or $50 a share, just because I think that's reasonable assumptions that Rocket Lab's management can achieve or exceed. If you're going out there and you're buying shares right now, you're thinking they're going to completely knock it out of the park, significantly outperform the expectations we just went through. Possible, but that seems a little bit less likely to me.
Gotcha. That makes a lot of sense. They are knocking it out of the park as is, and that is a pretty wild further hope for them. And people can find out more about 7 Investing's view on Rocket Lab and past deep dives at 7investing.com/rocketlab.
And I think we should call it at that, Heather. We've got a couple questions. I do want to address some of those in the community forum. In the interest of time, I would like to kind of wrap it up, but can we show that community forum link one more time? We can get a lot of these detailed, financial questions, the convertible debt questions, deeper pockets, all the things that they've got. I'm going to get into all of those. There are a lot of nuances in this business that impacts the valuation. But again, so many of those, maybe it's $1, maybe it's $2 per share. The things they have to get right is you have to get Neutron to the pad. You can't have it blow up on the very first test launch that it has out there. And you've got to scale the business accordingly. Those are going to be the big ones. Rocket Lab's shown us it's done the latter of those quite well. It's scaled the business quite well. We still have to see Neutron succeed. And then we're going to look for more acquisitions in the next couple of years too to unlock even more incremental value. Pretty excited about Rocket Lab's future. Long-term investor, held on to every single one of my shares thus far. Excited to see what they've got in the future here.
Everyone has a lovely day, and thank you for joining us.
Thanks very much. We'll be back next week. In the meantime, check out 7investing.com/subscribe if you want to see all of our recommendations. 7investing.com/RKLB if you want our coverage on Rocket Lab, or the link to the community forum for even more detailed analysis. I hope you have a wonderful day and a wonderful weekend. I'll look forward to seeing you again next week.